Mr. Balachandran. Uh, Retail growth on the retail health side. What's the sustainability of that? The growth has been strong for you. Can it sustain on a high base?
Yeah, that's a good question to begin with. But before I kind of respond to that, just wanted to kind of make sure that because we have started on a new year, so therefore to that extent, Happy New Year to all of you and your viewers as well. But now coming back to your point on how are we seeing retail, so the way we see retail for us spans across a couple of key lines, which is both motor and health. And let me take the health piece first. Now, retail health for ICICI Lombard has been an area of opportunity that we had kind of been doing for the last several quarters, and in that direction is where we have kind of invested a lot on building our distribution that cuts across multiple channels. And equally, I think we have been kind of launching products which are in the interest of customers. Um, Now, to specifically in the context of how that has played out, I think in general, historically, for ICICI Lombard, retail health, our market share used to be around 3%. The good news is, I think if you look at for quarter three, the market share as we speak stands at about 4.5%. And on a 9-month basis, the market share increase moved from 3.2 to 4%. So hence, that's done very well in terms of incremental market share in line with what we have been expecting. And in terms of growth, I think what we are very excited with is also some of the governmental reforms that has happened in the last quarter and which is kind of significantly created a positive growth for quarter three at almost about 86%. So very, very excited in the way how the growth momentum is playing out for ICICI Lombard in the context of retail health.
Right. Mr. Balachandran also wanted to discuss the motor market share as well. Are you seeing any signs of recovery coming in? And do you think it's going to get better going forward from here?
Again, that's a great point, which is what I was kind of referring to in my earlier response. Until half year of this year, I think the gap between the industry growth numbers and ICICI growth numbers have been at least almost more than 500 basis points. But if you were to see this gap for quarter three has significantly got reduced to almost about a percentage or thereabout. So clearly, I think the gap has significantly got narrowed. And more importantly, within the quarter three, for the month of December, industry growth numbers in motor was roughly about 12.4%. ICICI Lombard's growth was almost about 16.1%. So we have actually kind of outperformed the market when it comes to motor in the month of December. And that is exactly what I spoke about, is something that we are quite excited with how the rebound has started to kind of play out. And this is contributed by two factors. One, as I said, some of the governmental reforms in terms of clearly bringing out GST reforms. So that has created demand for new vehicle sales, which has been a growth factor for us. For example, in quarter three, new vehicle or other new growth was almost about 12.4%. And equally for ICICI Lombard, we continue to kind of look for retaining our customers. So there again, I think what we have seen is an increased retentions of our customers. So both of this have kind of aided growth in motor.
Okay. Let me talk, Mr. Balachandran, about CV growth as well, because within auto, you've given us good color on auto, but CV growth has picked up. So how are the numbers shaping up for you? Give us a sense of that.
Yeah, so which is the point that I made. I think the good news is the consumer demand is playing through all the segments, whether it's private car, two-wheeler, or commercial vehicles. And even for the matter of fact, the growth is also much more broad-based, as in to say that it is not just happening only in metro cities. The growth in motor is kind of visible across tier 2 and tier 3 cities as well. To your point on commercial vehicles, I think within that, I think if I were to kind of look at tractors as a category, I think that's done phenomenally well. I think we have been able to deliver growth in excess of almost more than 30% plus. So that's a segment which we have been very, very actively looking at, CV as a category. But insofar as the mix of private car, two-wheeler, and commercial vehicles for ICICI Lombards, that's something that will keep changing, and that is a nimble-footedness that we'll have to exhibit whenever we are kind of writing businesses, whether it is private car, two-wheeler, or commercial vehicles.
Right. But what about the combined ratio? Because that still is elevated. And what trend should one expect going forward?
Yeah, so that's a good question. And let me put this in context, which is what we have called out even in our earnings transcript. As you would recollect, effective October last year, I'm talking about financial year 24-25, there was a change in the way accounting prescriptions were laid down for recognizing long-term policies. Now, obviously, that tends to have an effect insofar as the outcomes on the combined is concerned between quarters. So rather a better way to look at is the numbers on an end basis, which is to kind of so that the numbers are consistently kind of viewed. If you view it in that context, for quarter three, our combined ratio on an end basis in previous year quarter three, that number was about 102.3. In quarter three of the current year, on an end basis, the combined ratio actually has kind of been better at about 102.2%. To your specific point on 104.5%, that's a number that's on a 1 by n basis. And as we have also laid down in our disclosures, it does have an impact of, again, a very good reforms that the government has done in terms of enhancing social security measures for generally the employee slash worker community as a whole. Now that has had an impact of almost about 100 basis point on the combined for quarter three. So what you see as a combined of 104.5 has a one-time impact of almost about 55 crores that we have provided for consequent to the implementation of the new wage code. And if you were to kind of take that as one-off impact which is there in quarter three, the reported combined would have looked at 103.5. So that's something that one should be mindful of. But more importantly, as we keep saying, I think one should always keep looking at numbers more on a year-to-date basis. And one of the other things that we had spoken about also in the earlier calls is to make sure that ICICI Lombard is able to deliver a sustained ROE in the range of 18 to 20%. And as you would have seen on the 9-month basis, our reported ROE was in that range of 18 to 20%. And that's something that we believe we should continue to sustain.
And what is the impact of the labor code on profitability? What should profitability be if one were to exclude the labor code impact?
As I said, we welcome the new wage code reforms that has been kind of put into existence. And the point that I made, 55 crores is more a one-off impact, which is primarily resulting from an actual valuation of our past service cost. Equally, there is an amount that we have disclosed, which is an amount of about 17 crores. That is something that will get amortized over the next 3 years. So those are the two impacts at this point of time basis whatever guidelines slash rules that has been issued. In the future, if at all there are any more guidelines or rules that gets issued, we will obviously evaluate at that point of time. But currently 55 crores is a one-off impact which has been fully absorbed in the quarter 3 and 9-month numbers for ICICI Lombard, and the unamortized cost of 17 crores in accordance with the accounting prescription will get amortized over the next 3 years.
Right. Interesting to hear that. Mr. Balachandran, thank you so much for your time today. Good speaking with you.